on debate. Government goes all out to revive the sagging economy. Top government sources tell ET now that a 65,000 crore rupee fiscal stimulus package is in the works. Of this, 25,000 crore rupees will be set aside for PSU bank recapitalization, while the rest will be used to revive small industries and exports. The move may send the fiscal math for a toss. That's a mega ET now impact.
The rupee takes a drubbing. The Indian currency falls to a 3-month low against the dollar, even as a 10-year bond yield jumps to a 4-month high on speculation that the government stimulus package might come in the way of fiscal consolidation.
Tata Sons wins a crucial shareholder mandate to go private. The move limits the Mistry family's ability to sell the 18% stake to breathers. But there's a big breather for Mistry too, as the National Company Law Appellate Tribunal waives minimum shareholding norm for his group companies to file petition against the Tatas.
It's a big blow to Mamata Banerjee's government in West Bengal. The Calcutta High Court lifts restrictions on Durga idol immersion during Muharram, says both the religious activities can coexist. Also wraps the state government for wielding extreme power without any basis.
The plot thickens over Kamal Hassan's political debut. The southern superstar meets Delhi Chief Minister Arvind Kejriwal, even as he praises the Aam Aadmi Party's fight against corruption and communalism, leaving very little to imagination. Hassan pledges support to Kejriwal's cause and says they will meet again.
Rohingyas from Myanmar are illegal immigrants and not refugees seeking asylum. That's the rebuttal coming in from Home Minister Rajnath Singh, justifying the Modi government's position on this burning issue. Rajnath says Myanmar's readiness to accept Rohingyas is a vindication of the centre's stance.
India's top automobile company Tata Motors makes its debut in the compact SUV segment, drives in the Nexon with an aggressive price tag of 5.85 lakh rupees for the base model. In exclusive chat with ET Now, the company's MD and CEO Gunter Buschek says Tamo will go full throttle to make up for its late entry in this fast-growing segment. Those were the headlines at 9 p.m. and now on to the big debate tonight. Now, we've been, viewers, championing the cause for a big stimulus to revitalize the economy, and looks like the government has finally relented. ET now learns from top government sources that the Modi government is toying with the idea of pumping in 65,000 crore rupees into the system. Of this, we learned 25,000 crore rupees will go into recapitalize public sector banks, leaving aside about 40,000 crore rupees for export push and working capital support for small enterprises. The government's move comes against the backdrop of the note ban hangover and GST hiccups.
Indeed. So where will the funds really come from? Because unless the government finds new avenues to raise money, this fiscal profligacy could send the fiscal math for a toss. Finance Minister Arun Jaitley says the government will go aggressive on the divestment front, including the big bank sale of national carrier Air India. Our take on this matter is absolutely clear from day one. It's time to reboot the Indian economy, even if it means some giveaways on the fiscal front. In this regard, we at ET Now believe that the 65,000 crore rupee stimulus package needs to be done no later than now, because it may be too late if it is delayed. Debating stimulus for growth on India Development Debate this evening, I'm Supriya Srinath, and with me in Mumbai is my colleague Sandeep Kurumurthy. All right, stimulus for growth is what we at ET Now are calling this. This is the India Development Debate, and we're going to kickstart things with a very, very special guest here. The Niti Aayog CEO Amitabh Kant joins us live right here on the show this evening to talk about the need for stimulus, the fiscal considerations, and what will the contours of the stimulus really be. Mr. Kant, thank you enough for being with us this evening to talk about the stimulus that New Delhi has finally made its peace with. So I'm glad that you at least, your government is at least looking at things the way we at ET Now are. But the finance minister just yesterday hinted at a package to boost the Indian economy. Do you believe that the government needs to come up with a mega stimulus package?
My personal view is that we need to give a push as long as, given the total size of India's GDP of 100, if you look at this year's expectations, about 160 lakh crores, then 0.5 would be roughly about, if 0.5 would roughly be about 80,000 crores or something in that region. So even if you look at from 3.2, you were to escalate it a little further in the region of about 0.5, the quality of the breach of the fiscal discipline is important. It's not about fiscal discipline, it's the nature of your spend. As long as you are spending not on revenue, but on good quality infrastructure, or if you're spending on exports, or if you're ensuring that you're able to penetrate global markets, or if it's going towards ensuring that there is greater credit flow into the Indian economy, I would welcome it. I would definitely welcome it, as long as it doesn't go, and which I'm quite sure if there is ever a thinking on this line, it should not ever go into interest or pension or subsidies or the revenue expenditure at all. That's a total no-no. In fact, there's a need for greater discipline on controlling our revenue expenditure. There's a huge need for controlling our revenue spends and ensuring that all spends go into only infrastructure, and in terms of ensuring that our MSMEs and our exports get a major push up.
Right. Mr. Kant, now, the contrary argument, and some experts warn that breaching fiscal deficit target may hurt credibility with rating agencies. Do you think that's a bit of a red herring, considering India has got one ratings upgrade in 25 years?
No, I don't think we need to worry about grading. We need to worry about the direction in which we want to take our economy. And we need to create a great sense of activity on ground. And we need to push our economy. And if any kind of stimulus is needed, it is needed to drive our economy. I don't think we need to worry about rating agencies. And as far as rating agencies are concerned, they've gone on record to say, as long as the quality of the spend is in terms of infrastructure. So we should ensure that whatever we do, we pick up ripe infrastructure projects where results become immediately visible, where exports become immediately visible, where job creation becomes immediately visible. And as long as that is true, then that's absolutely fine from an economic perspective. Even from a rating perspective, I'm quite sure they would all welcome the quality of the spend. But I'm absolutely clear in my mind that it's infrastructure which will drive growth, it's exports which will drive growth, and it's job creation which is critical to Indian economy. Nothing else is.
Fair point indeed. That's a very bold statement that you're making, coming from the government of India, that what we need to do is focus on our own economy to boost it instead of worrying too much about ratings agencies. But just the last bit that you said about exports and MSMEs and things like that. Experts do believe that for any economy to grow at 8 to 10%, if exports continue to grow at 2, you cannot achieve those numbers. What can the government perhaps do to incentivize exports? Is there a case for looking at depreciating the currency maybe?
No, I think we need to take a long-term perspective, Supriya. This is not about immediate responses. To my mind, we need size and scale of manufacturing, and it's very important to change the Indian mindset, to understand that it's not the domestic market which gets you big bucks. The domestic market must be used as a springboard to penetrate global markets. And the big markets are out there. What you get in the domestic market, 10x of that you will get in the global market, and therefore exports are critical. No country in the world has ever grown without penetrating global markets. Look at Japan, look at Korea, look at China. They have grown on the back of exports. So the size of whatever the country needs to do in terms of policy and structural changes for exports must be done. This is the time, and I think it requires reforms all round to push for our exports. But important thing is that we must make India competitive. You can't make exports grow on the back of subsidies and government assistance. Indian manufacturing must become globally competitive.
Right, Mr.
And it
Mr.
must
Kant,
be part of the global supply chain.
Sure. In terms of more specifics, exporters are currently battling an immediate crisis with 65,000 crore rupees of refund stuck with the government, largely on account of extension of the GST return filing process. What can New Delhi do now to expedite this process and give a more immediate relief to exporters who are sort of facing a liquidity crunch?
No, so the finance minister has held a series of meetings, and I think he'll have an appropriate response. He said that he'll be discussing with the prime minister. They are very alive. This government is very alive and very vibrant to what's happening, and they will have a policy response to this.
Yeah, I think they'll have to act fast on that fund crunch for exporters there, and we do hope there'll be some decision coming in from the Finance Ministry and the GST Council, sir. But Mr. Khan, the Niti Aayog has been championing strategic divestment. You have even sent a list of candidates for strategic stake sale. Why has the progress been so tardy, so slow? Is the government, again, all over wary of the word privatization?
No. I think the government has moved forward. The government has moved forward quite vigorously. Whatever recommendations we moved in, each one of them, they've moved forward. They are very advanced stage. Several of them at a very, very major step forward to actually achieving this strategic disinvestment. But all of them, they've appointed transaction advisors. The important thing to understand is that, when you're doing government transactions, they must be done in a very transparent, very competitive manner. Because it's always open to public scrutiny, and I think that's been done by this government fully. Niti Aayog will continue to keep recommending disinvestments, and I think the Department of DIPAM is pushing for it in a big way.
All right, last word then, Mr. Kant. And, don't you think it's a bit ironical then that a government, that a year back, we were referring to India as the fastest growing economy. The government was celebrating the India growth story and tom-tomming it everywhere in the world. And now everyone is clamoring for a stimulus package. And much of it is because of damage that was inflicted by the government with the controversial demonetization exercise.
No, I don't think so at all. I am a great believer that it was very important for India to formalize its economy. You can't keep growing with half your economy being in the informal parallel sector. It's not possible. Your ambition of growing at having a $10 trillion economy can't be that you have $5 trillion in the black economy. That's not possible. You needed a major shake-up. That's been done. You needed a GST. Everybody was crying for it for the last 30 years. A problem with many of us is that we want structural changes. We don't want to pay the price for the teething period of it. There will be teething period. We should be bold, courageous, gutsy and determined to face this challenge. And we will face this challenge.
All right, we'll leave it at that. Amitabh Kant, thank you for taking time out and joining us with the government perspective on the India development debate. Viewers, this is the third India development debate that we are doing on a stimulus for growth. And joining us on the debate this evening are four very eminent economists. Dr. Shamika Ravi, Senior Fellow at Brookings India, Madhavan Narayanan, Senior Editor at First Post, R. Jagannathan, Editorial Director at Swaraj Magazine, and Sunil Kumar Sinha, Principal Economist and Director of Public Finance at India Ratings. Thank you all so much for joining us on the India Development Debate. Jaggi, good to have you for the second round of the debate on stimulus for growth. I'm going to start off with Dr. Shamika Ravi. You heard some parts of the comments made there by Amitabh Kant, and just yesterday where the Finance Minister also indicated that the government is evaluating some sort of a stimulus package for the economy. Do you believe that the government is doing the right thing in considering a stimulus package for the economy, given where we are as far as economic growth is concerned?
Well, I think it is a good move, and I'll tell you why. But the only fear is that, a stimulus like this shouldn't be designed to just raise, irrational exuberance in the short run. So it has to be done right. Now, what exactly does, doing stimulus right mean? Over the last 3 years since this government has taken over, there is an attempt to get after black economy, they're trying to get after corruption. They're trying to formalize, digitize, all those efforts really. And of course, then there's the uncertainty of the GST, which is a good move, but it takes time for people to adapt to these new systems. Now, that uncertainty has to be now countered by, the government coming ahead and supporting, so sort of offset some of this. And rather have, short-run irrational exuberance. They must really now think of kinds of spend that will lead to growth and job creation. I think at the end of the day, that becomes one of the main objectives. And here, I think the mood of the nation would be, in terms of the private sector, it would be raised tremendously. If the message went out that it's okay to make profits and the government is really going to get out of the way, divestment, get rid of Air India, ITDC, some of these moves perhaps could even finance the stimulus, would really then set the tone, to really achieve the long-term objective of a stimulus like this.
All right, do away with the short-term exuberance, but keep your eyes focused on the long-term impact of what the stimulus can do is the first word that's coming in from Shamika Ravi. But I'm going to take this to you, Mr. Sinha, and we know fiscal space is not available. I mean, data and numbers do tell you right now that the government is going to be short of about 50,000 crore rupees on its own revenues because of lowered divestment and lower spectrum proceeds. Why do you believe it must not be created given the stress in this economy? I know that's your view.
At the moment, as you rightly said, fiscal space is very limited, but at the same time there is a need. But on a more broader level, my view is that there are too many knee-jerk reactions that are coming forth from the side of the government. Demonetization and thereafter whatever happened, we have seen that there have been too many knee-jerk reaction, and even now providing fiscal stimulus in my view would be a knee-jerk reaction. Let us look at the way the growth trajectory has evolved over a period of time. I mean, it's not that growth has come down suddenly as it happened in 2008, and so if growth has slided over a period of time, to expect that one booster shot will suddenly move the growth from whatever level it is now to a level that you desire is simply not possible. So I think we need to take a more patient view of the economy, get the things right. Structural reforms which have been initiated in the economy will obviously pay the economy in the medium to long term. But these short-term reactions or knee-jerk reaction either to stimulate growth or to put the economy on a fast track, in my view, rather than doing more good, will do more harm.
Okay. Don't look at knee-jerk reactions. Be more patient. Bear out a slowdown, says Sunil Kumar Sinha of India Ratings. Jaggi, you vehemently disagree with that view, and you believe that the situation is dire and there's a need for stimulus, and that needs to happen now.
Yeah, I mean, I don't think this stimulus package, which could well be a package for this financial year and which could be followed with another broader package for the next full financial year in the February budget or whenever it's held. So I think it's not knee-jerk. When you had 5 quarters of falling growth consistently and you have had 2 shocks also coming in, how is a package that's meant to work right now considered knee-jerk? It is not knee-jerk at all. I mean, it would have been knee-jerk if we had done something, say, 2 years ago when we were growing very fast and the expectation was that we would do even better. But we have had consistently a low level of industrial output, very bad, despite two years of drought. Then you had 1 year of good monsoon, and that was a marginal revival. But basically, structurally, the economy has been trending down because of the over leveraging and bank bad loans. So we have to correct that, and of course, you have the export problem that has also been there. None of these was addressed in a knee-jerk fashion at all. So this thing is the first time you are doing a slightly long-term thing, and I see this as the first part or the first tranche of revival packages which will actually get taken forward in the February budget.
All right, you believe this is just the first tranche that's coming in. I wonder what that does to ratings agencies. But rather, Narayan, let me come to this. Do we obsess too much over ratings? I mean, look at what Soumyakanti Ghosh of SBI says, that don't chase the ratings mirage. We've got 1 ratings upgrade in the last 25 years. Do we somewhere lose sight of the fact that no matter what you do, the ratings agencies are not going to be impressed? So why pull your own economy down to impress them? Why chase that mirage?
Absolutely. I think we get a bit tongue-in-cheek on this, Supriya. I think the rating agencies are just a bunch of bright young people looking at Excel spreadsheets with an orthodox copybook style. The economy, a political economy like in India, in which Narendra Modi has promised the moon for the 1 billion Indians, and with a complex mix of demographics, the major demographic surge in which 1 million people are entering the workforce every month is not to be taken in simplistic number crunching by copybook style. We need to be creative about this whole process, and in the creativity we have to, like we say in cricket, exploit the gap between slip and gully and play our shots. And what it means right now is that both inflation and fiscal deficit are well in discipline zones, and we can afford to play our shots. And as Jaggi rightly observed, if you've had 5 quarters of growth falling down, and for an 8 to 10% ambition economy to have sub 6% growth is simply unacceptable. And in the middle of a structural change, we need sweeteners for things like GST, so that the pain of structural change does not hamper normal long-term thinking, because sentiments also matter within small businesses, within export community, and therefore we need to be a little more bold. And look, I have covered the crisis of 1991, when India had a fiscal deficit of 8.3% of the GDP and inflation was at 17% on the wholesale prices. We have come out looking good after all that. So we can definitely weather this. $400 billion of foreign exchange reserves. So the boys in the ratings agencies are to be taken seriously, but not in a way that what they are saying is gospel. We could do with some elbow room. In fact, let me remind that Arun Jaitley has just one more budget to go.
Right.
The second budget would be the election year budget. So
Right.
what is this government waiting for?
Right. Sunil Sinha, you heard R. Jaggi there, and R. Jagannathan there, and you heard Madhavan Narayanan as well. Counter that, why obsess so much about ratings? Before we, move on with the debate and talk about the size of the stimulus and where should it focus on, this point on obsession with ratings agencies, Madhavan Narayanan, they're making a point about the fact that it's a bunch of young people who have a copybook approach to economics that doesn't necessarily work in the case of a political economy. How are you going to counter that, Sunil Sinha?
Well, I will not comment on what others think about rating agencies for the simple reason that I am not authorized to speak on that.
Sure.
But on a different note, let me say something about the economy as such. I think, if you just look at the growth of fiscal year 16, then the revised estimate puts the overall GDP growth at 7.9%. But for the demonetization, the growth would not have come down to 7% and now to whatever we have got in the first quarter. So let's not, believe that something which has been done to the economy was not, incorrect. There is something. Now, once you inflict certain injury and then you try to rub balm by saying that 40,000 or 50,000 crore of rupees will suddenly turn around the economy, in my view, is nothing but a knee-jerk reaction. Let me also put forth a statistics. The data put out by CSO clearly shows that if you look at the investment, an investment profile divided over household, private, corporate sector, public sector and government, the share of government in investment is just 11%. Now, 50,000 crores of rupees, I mean, 5,000 crore of rupees is the budgeted estimate for fiscal year 17. 45,000 was the revised estimate for, fiscal year 17. So you have in any case raised the, investment by 50,000 crores of rupees in fiscal year 18. I mean, what difference is it making on the ground? I mean, in other words, the point I'm making is that there are many other ills in the economy which needs to be fixed before, any of these stimulus, or all the time our clamoring that interest rate must go down to revive the economy really, makes any difference on the ground.
Actually, that's a valid point indeed. And Shamika Ravi, I'm going to throw my weight behind that argument and ask you yet another question. I'm not going to question the whole premise of a fiscal stimulus, but what it's going to do, it will soar inflation perhaps. It is also going to raise interest rates, because if RBI is in an inflation targeting regime, it is going to harden its rate stance. It will definitely harden its, will change its stance from neutral to perhaps hawkish. My my question really is, while you know the passing comment that Mr. Sinha made in the end, that interest rates, there's too much clamor for it, what difference will it make? Will it make a difference at all on the Indian economy? Because higher interest rates is what is going to kill sentiment, even though stimulus may want to boost sentiment. They may work in total opposite directions to each other. Contrast.
You see, you're right, you're right. But you know, one thing we are sort of missing in this entire discussion is that none of these things, the stimulus or a cut in the interest rate, mind you, is a substitute for actually improving the ease of doing business in this country. And you know, while the government has been investing and trying in a lot of structural reforms, and again GST and all of those, they do add to uncertainty, but we really haven't, you know, come down hammer and tong in making, you know, the ease of doing business environment more business friendly, which means faster compliances, smoother permits, you know, all kinds of applications which take months. The recent Niti Aayog IDFC Institute survey showed that you know, businesses take months to get certain clearances and construction permits, etc. Now, you know, if on the ground those things are not really getting improved, then like I said before, a stimulus of this nature is only going to lead to, you know, a part-time, what I call irrational exuberance in the market, because it's going to be very difficult to sustain that. So one, we have to get down to the ease of doing business issues, right, real nuts and bolts of doing business, getting a lot of these regulatory hurdles out of the way, simplifying procedures, you know, and that is really, you know, none of this. And the second is really raising the mood overall. And raising the mood overall is not just done by government spending, and I think the intent has to be there, and this is where some large ticket, some you know, big bang divestment is required.
Couldn't support that more. Big bang divestment is what the government needs to do. Send a signal that it means it's business when it comes to privatization. But Jaggi, let's now dig deep into the stimulus. Now, you know, you made a pitch for a 1.5 lakh crore stimulus package. We're given to understand from top government sources that what's coming is likely to be in the range of 60 to 65,000 crores, including some amount for bank recapitalization. Is that enough? Is that too little? Is that neither here nor there sort of a figure? What do you make of it?
Yeah, I would have thought that something that's much more substantial would have sent a much stronger message from the government that we are going to get the economy out of the ditch. But it's possible that this, in order to keep the fiscal math in place this year and to start on a cleaner slate next year when the budget is done, is being split into two parts. That's what I guess may be happening. So there may be a large dose coming in, but it's coming in two parts, which also is fine, because you're not going to be able to spend whatever you want to spend in the next remaining 3-4 months of the thing. And also you will know by early next year how GST is actually panning out and other things. I think I wanted to go back to one of the points that the earlier speaker made. Our problem is we are looking at the center, which controls about 38% of national tax resources, to do everything possible to get the economy out of the ditch. When 62% of your resources are with the states, and if the states are pulling in a wrong direction and towards further deflation and farm loan waivers, which means that the central, what the efforts are being made at the central is actually being neutralized by states not doing things. We keep saying reforms when it comes to the center. But no reform actually is taking place at the state level, where you have land policies, agriculture policies and all that. I mean, none of these things are actually being done. So the reform momentum really needs to now come from the states, and that's where we are failing.
All right, that's where we are failing. Reform momentum can't just be a New Delhi-oriented thing. It needs to come in from places like Lucknow or Bhopal, Bangalore and all other places like that. But let's and while we are talking about the stimulus, let's get down to the very specifics. And what we've been given to understand at this stage is that the PSU bank recap, and there could be a top-up, an additional money of about 25,000 crore rupees coming into this PSU bank recap. Mr. Madhav Narayanan, if I may throw this to you, according to some estimates, 11 big PSU banks need capital to the tune of a recap to the tune of 70,000 crore rupees. Is this 40,000 crore rupees, which is budgeted for, and of course the additional top-up of 25, really going to move the needle?
I think it would, for the simple reason that we don't need all of that at one go. the fact that the government can take the recapitalization of banks in the right direction with a significant dose should be getting them started. The banks also have to move on their own. Let's remember the RBI has put in place a process of insolvency for bankrupt companies. It is also encouraging public sector banks to go towards mergers at the board level. My wish would be for the government to step in because, like I said, earlier I mentioned ratings agencies, but whether it's RBI or rating agencies, it's important to remember that they are doing their job according to their dharma. That's what they're supposed to do. It's for the government to be a bit more both creative and fast in doing certain things. I think the government should move faster on recapitalization of banks in order to end the uncertainties, at least lay down a roadmap for recapitalization which is proper so that people would know what are the milestones to look out for. And that would itself boost the sentiment in the economy. That would also boost the move in the bank boards towards taking calls on loans. And that would also hopefully set the pace for private investment to kick in, because ultimately, given the fiscal consolidation ambitions, there's a limit to which the government can play on the public investment front. So what we need is a harmonized spread out of the stimulus, not only in terms of quantitative recapitalization of banks, but also in terms of roadmaps, the kind of breakup between various kinds of stimuli that are needed. And I think one estimate from Fitch puts the overall bank capital needs at 4 lakh crores. That's an awful lot of money. But even if 70,000 crores are needed by 11 banks, we have to start somewhere. 40,000 is a fairly good call under the present circumstances.
Right.
What the government needs to do is to announce it. I mean, let's not keep any suspense. Let the markets hate uncertainties everywhere.
Right. Okay. Remove the uncertainty, move with it. But Dr. Shamika Ravi, I wonder if you have a different view from both Jaggi and Madhava Narayanan here, who are of the view that we must infuse more capital into PSU banks. Many would argue that why should taxpayers' money fund poor decisions of banks? If PSU banks are in this state, it's largely because of the fact that they made some wrong decisions. So why should taxpayer money fund this? Why should good money chase bad money? What's your view?
No, actually, the public sector banks that we talk about as if it's one large bucket and they're all homogeneous entities. It would be good for the sake of transparency, again, because it's taxpayers' money which is going to be used for this, to be sure that we are not just postponing this crisis further by infusing small amounts of money into a large number of poorly performing banks. It would be good to see some details of forensics which is being carried out. It should be okay to let some of these banks which have particularly performed bad because of either the due diligence or just poor nature of its governance. It's okay to let some of these banks fail, in my opinion. And I again think it goes towards, it will correct the mood in the nation. I mean, the idea being that, the government means business. And some of the banks which have relatively performed well, and though might be sitting with NPAs, but not all of it is really on account of poor decision making or bad governance. I think those banks should be the ones prioritized for this kind of support. Because there is this excellent research that one of the deputy governors of RBI, Viral Acharya, he has a recent paper which basically says that if you keep infusing these small amounts, what you're going to see is these banks making more and more ghost loans to basically showcase that the accounts are actually the strength of the bank is intact, and that might really just lead to further postponements. So I think forensics and a little more transparency on the nature of each of these banks is quite required. I wouldn't say that in blanket just give them the money.
And Mr. Sinha, let me come to you. How can we be growing at 8 to 10% when our exports are still lagging at 2%? Amitabh Kant didn't ask that question directly. He said exports need to be revived. He didn't answer the question of what needs to be done. What is your prescription?
Well, before I come to that question, say something about an old Planning Commission report, which had estimated that if India really wants to grow at double digit, then its year-on-year, exports growth has to be 20% and above. So that clearly tells you that how important you see exports growth is. And as you rightly mentioned in your opening remarks, that some of the countries which have really made significant progress in the last 2 or 3 decades, a majority of them were actually driven by very high rate of exports growth, whether it is South Korea, Japan, or China. So while I agree that if India is really looking at a growth rate, sustained growth rate of 8 to 9%, then obviously 2% export growth will not do. We need to have exports growth which is somewhere close to or say in the double-digit territory. Now, I think the most challenging part of stimulating growth is that it is something to do with the external environment, and that cannot be corrected by the government or government policies. Those are given to you, and you have to respond to that. So you can at best try to maximize it either by kind of making your currency more competitive, by incentivizing the exports, or doing say credit facilitation. All of that is very much there. But on the whole, my own view is that so long, and also some of the outcomes that world has witnessed in the recent past, whether it is the election of Trump or otherwise, I mean, I think increasingly the way the globalization was talked about at the global forum, to me it looks like that they are dead. There is more emergence of the regional bloc, regional partnership, and so on and so forth. So I think India needs to go very aggressive on that, which in any case I suppose India is doing that. But at the same time, the constraint is definitely there, and one statistics which clearly captures this whole dilemma is that between 2002 and 2011,
right,
the the global GDP grew at around 3%, whereas the global trade grew at about 6%.
Sure.
And today the global trade is less than 3%, whereas global GDP is about 3%.
Okay.
So that really captures what are the opportunities on the export front.
Okay, point noted. Jaggi, let me throw it to you. And the more immediate crisis as far as exports is concerned is, to do with the refund of about 65,000 crore rupees that's stuck largely on account of the extension and filing of GST returns. On hindsight, does it feel like GST has turned out to be far more disruptive than one had originally anticipated? I mean, I'm guessing a disruption like this, where a serious liquidity crunch for exporters is not something that one would imagine policymakers having anticipated.
Yeah, absolutely. Because GST is a destination-based tax. You finally know whether what taxes you have collected only when you have set it off against all the input credits that have been claimed in the interim, which means a lot of funds get blocked through the whole process. I think there is a learning curve here, and I'm afraid that this is probably going to take at least one more quarter and will not end with the September quarter, which is the first quarter of GST. So I think what the government can do is probably tentatively try and speed up the refunds in the case of the export sector, so that they are reassured with the statement that if later some input credits were found to be false or something, they may get reversed, but at least it will ease your fund crunch. Two other short-term things that they can do is, apart from interest rate subvention if required, is actually to provide a cheaper cost of forward cover. I mean, just like I think Raghuram Rajan did in 2013 when he wanted a huge influx of foreign exchange. I mean, he gave the forward cover to banks where they could raise a lot of money. I think if you can artificially lower the cost of forward cover for exporters, that would be a small stimulus. I think beyond that, I can't see, every other step is long-term in nature, improving your productivity, going into sectors which are export-oriented, garments, those kind of things. But those are not going to bear results in the next 3 months or 6 months. It's the financials where you can do immediate short-term relief and give a boost to the sentiment.
All right, Shamika, let me throw this to you. And the whole idea of this package, and one of the legs that's going to focus on, we've been given to understand, is also MSMEs, the micro, small and medium enterprises, the real engines of growth. And just to throw numbers at our viewers here, they employ about 60 million people, they contribute to 8% of the GDP. manufactured output at 45%. So these are very, very important enterprises that we are talking about. They're an engine of job creation, like we just said. They have been badly hit by demonetization. There was a lot of cash crunch. Some of them have shut shop. Is there a case for interest subvention benefits for MSMEs as well?
Oh, absolutely. In fact, while we have been talking a great deal in, I would say, the last 1 decade or so, the emphasis has still very much been on, stimulating larger firms. In fact, within the MSME again, the micro enterprises require a very different reform strategy than your small and medium. And again, we are going back to those fundamental factors about ease of doing business. It is not, well, financing is obviously one constraint. This stimulus, if it is targeted towards that sector, it will, in the short run achieve some of the objective. But again, we have to remove these hurdles. It should become easier for these guys to start and wind up business and expand business and so on. So again, compliances and permits and all these certificates, we have, the government beyond financing, I think, and this is really the back end grunge work, where I think there was an earlier point made in the program by one of the panelists, that this is where the states come in. The states have to now really break down these procedures of what we look at in the life cycle of a firm and try to make things easy for this space, the MSME space, because for these guys to maneuver the regulatory framework becomes very costly. Unlike larger firms, which the cost of relocation, etc., is relatively easier for them. They are able to raise finances on relatively better terms. This is a sector which, essentially operates, on higher costs, even vis-a-vis, not just labor, because there are a lot of, labor reforms which are still being talked about, and many states have not really experimented with or brought on the table, but also access to finance.
Right.
This is a sector which must be prioritized, again, from the job creation perspective. Now, this is where, the problem is that even during the time when we had massive growth of manufacturing and so on, even within the organized sector, most of the employment created was informal in nature or contractual in nature. So now I don't know what will be the nature of the data that you're going to analyze to then say that it is the SMEs indeed which are leading to expansion in employment or whatever. But this is a sector much in need of not just credit, but ease in the
doing business
reform, overall regulatory framework. Yeah.
All right. So you're saying MSME sector needs to be a focus area, and that's something that the rest of our panel agrees as well. But Madhav and Narayan, let me come to you now. Even as we sort of broadly build a case for fiscal slippage, I know Mr. Sinha and our panel disagrees with that point of view, but why do you believe the government has been so tardy when it comes to strategic divestment? I mean, that's an easy way out, for the government to explore. They're making some progress on the sale of Air India. Today we heard the finance minister finally, at a conference in Delhi, make a strong pitch for more aggressive divestment since the market environment is conducive. But one gets the feeling that they've been a little tardy when it comes to strategic stake sale. We don't see the sort of, the way the Vajpayee government moved as far as privatization strategic sale is concerned. Partly because one gets the feeling that the Prime Minister believes privatization is a dirty word. What do you attribute it to?
I don't think the Prime Minister believes the privatization is a dirty word. I think, but Arun Shourie, who was the disinvestment minister in the Vajpayee government, set us a very high benchmark by being very proactive about the whole process. This government is not proactive enough, especially on Air India, which is like a sitting duck for privatization. There is absolutely no case to hang on to Air India and invent fairy tales on how to keep it in the public sector. I think that is, in my opinion, the elephant in the room. The elephant in the room is a Maharaja. So therefore, we have to sort of do something on that front for sure. But having said that, let me also add that disinvestment and stimulus and market conditions have this peculiar relationship with each other. If you disinvestment, if you divest, you can stimulate growth. If you stimulate growth, you can have good market conditions. But only if you have good market conditions, you can divest at a good price. And therefore, there is a bit of a vicious circle here. The government has to some sort of untie the Gordian knot by biting the bullet, if that's the word, or maybe being proactive. And I think disinvestment, a lot of disinvestment has been taking place through the IPO route in some sense perhaps, or the secondary issues route. But I think the government must send a signal by doing some big ticket stuff, especially Air India, that needs political will. And why is no minister standing up and instead of setting up panels, stating it very clearly that we cannot live in that kind of environment anymore. After all, this is the government which ostensibly claims to undo the Nehruvian legacy. So let them at least do it where it's absolutely transparent that we need surgery. So I have no doubt on that front.
You know, Mr. Sinha, I'm going to come to you on a very specific question as far as raising resources and revenue is concerned. The government has stake in these blue chip companies via SUTI that it holds. Why not sell all of that? It's worth about 60,000 crore rupees, can easily finance this stimulus that we've been reporting here on ET now, because you know, we've been told time and again that money or that stake is for a rainy day. What could be rainier than a 5.7% growth rate and no jobs?
Well, so far as disinvestment is concerned, I'm, really intrigued by the way the whole process gets managed year after year. I mean, every year at the time of the budget presentation, you have some very fantastic number being thrown out in the budget. And by the time you reach the end of the fiscal year, you really see that you have slipped on that account by a huge margin. So I really don't know that, whether there is any diagnosis or any analysis being done within the government to come up with the number for the new year budget, or they simply extrapolate it and then come up with a new number and put it in the budget. Because if you have not been able to achieve even the 50% of your target in the previous fiscal, how do you believe that by even going beyond the budgeted number of last fiscal year, if you budget it in this fiscal year, you will be able to do it? I mean, fortunately for this year's budget, the disinvestment target did not increase much. It is still somewhere around 69,000 crore of rupees or something like that.
Sure.
But I mean, purely from a fiscal, arithmetic perspective, I mean, I think when I was looking at the data from 90s till 2000, I mean, all those years when the disinvestment has taken place, probably there is only 1 year when disinvestment target has been achieved. In rest of the years, we have not been able to achieve it.
Okay.
So I mean, I'm as confused as probably you are as to what goes on when this whole issue of disinvestment comes up and the targets are fixed.
Okay, so there is a serious credibility crisis when it comes to divestment as a whole. Probably it needs a new approach, and probably we need to sort of, look at privatization more aggressively. Jaggi, let you have the last word on this debate then. Frankly, no one can read the mind of the Prime Minister, and, you've sort of been successful a few times in the past, so I'm going to let you take a shot at this. He's been fairly conservative when it comes to fiscal policy over the last 3 years. One would have thought him to be a little less orthodox when it comes to fiscal policy, but he has been conservative when it comes to fiscal policy. But do you think the circumstances are now different and that he will bite the bullet? Because we all know that eventually this is the Prime Minister's call on whether or not to go in for a stimulus, when to go in for a stimulus, and how much of a stimulus, right? Eventually it's the Prime Minister's call. Will he bite the bullet now?
Yeah, I don't think he has an option. I mean, he might have wanted to keep the fiscal consolidation map on the same track, which goes towards better. He leaves the fisc in a better shape at the end of 2009, at the middle of 2019, so that he can say that, look, I have run the ship tight. I have not allowed wastage. I have not done this. I have made sure that things are stronger, that India is stronger than before. But I think his other impulse, which is to clean up the system, reduce corruption, go after black money in multiple ways, that has actually lowered the tempo of business sentiment and activity. You see, the borders between legitimate money and tax avoided money have always been porous in India, which is why even when companies fail, somewhere the money comes in through multiple routes. Today, those routes are being closed. So what it means is that business has to generate profits internally, and that's going to take a long time. which is why we need the stimulus in the first place. Because if business had already been going on great guns, then there would no need for the stimulus. But the Prime Minister's broader policies on black money and all have actually lowered the tempo, and that is why you need to improve it by actually going for the fiscal stimulus. I believe now he has given up his old limitations on thinking about privatization. Yeah, I think he has to do it, and he will do it, I think.
So New Delhi teaches you a thing or two. It teaches you to be a little less conservative about privatization and also give up your conservatism when it comes to stimulus. But that's the words that our panel has here. Thank you very much, Shamika Ravi, Mr. Madhavan Narayanan, R. Jagannathan and Mr. Sinha for being with us on this edition of the India Development Debate. On a parting note, viewers, this is our third edition of Stimulus for Growth Debate. We are impatient for growth to revive. India must not settle for 5%, 7% growth. We believe that the government should do whatever it takes to kickstart the economy. Textbook approach to economic policy is really not taking us anywhere.
It's time the government smashes the ball out of the park for the sake of the Indian farmer, for the sake of the job-seeking graduate, for the sake of the young Indian entrepreneur. India cannot afford a slowdown. Thanks for being with us on the India Development Debate. Up next is Top 10 at 10, right here on ET Now.